This chart plots global economic data for 2026. It shows a widening gap between two metrics. While asset valuations are breaking historical records, actual real-world GDP growth has stalled. If the trillions of dollars theoretically driving the economy are not funding expansion, we have to look at where that capital is actually being stored. Much of it exists in the ghost economy, a state where vast sums of capital are locked in idle assets instead of being invested in factories, research, or wages. Prosperity relies on the movement of capital. Money generates progress only when it is in constant circulation. The current trend favors using assets strictly as a store of value. This stationary capital produces zero utility for the broader economy. The shift from dynamic circulation to parked wealth mirrors the flatline in global growth, as capital is pulled away from the mechanisms of human progress. We see this stagnation in the skylines of major global cities. Massive luxury developments, like this glass skyscraper, represent the physical scale of modern asset parking. Investors use a buy-to-leave strategy, purchasing ultra-premium real estate to hoard wealth and leaving towers 90% vacant. These structures function as offshore tax havens, providing a legal and financial shelter rather than serving as residential housing for the local population. Removing this volume of housing from the market increases the cost of living for the people who actually live and work in the city. This lack of inhabitants drains commercial activity from the streets, leaving urban centers without the customers needed to sustain local businesses. These empty towers act as hollow shells, drawing in capital, but returning no commercial velocity or regional health to the surrounding economy. This same hoarding strategy moves from physical property to intellectual property. Historically, the United States Patent Office was designed to protect and incentivize the release of new ideas. Today, corporations build patent thickets, accumulating thousands of overlapping patents to legally barricade competitors and prioritize market exclusion over product development. This legal hoarding delays breakthroughs in sectors like green energy and medicine by weaponizing the right to exclude others from using vital technologies. This network visualization illustrates the multiplier effect. A single dollar flowing through a local business or startup branches out to create jobs and further innovation. Money trapped in an empty penthouse or a hoarded patent blocks this multiplier effect, cutting off the resources high-growth startups need to survive. The opportunity cost of the ghost economy extends beyond empty rooms to unbuilt infrastructure, delayed medical cures, and unfulfilled human capital. Reviving growth requires land value taxes designed to penalize the hoarding of vacant urban real estate. In the legal sphere, use it or lose it patent reforms would force unused technology back into the public domain, where it can be developed. Transparent blockchain registries could be used to expose the shell companies currently shielding these unproductive assets from public view. These policies support a shift from a culture of passive value storage to a mandate for the active circulation of value. Global growth returns when we move wealth out of hiding and back into the productive economy, ensuring that capital serves a social utility.